Hi everybody, today we're going to introduce net surplus income, which is the main uh, calculation for mortgage in Australia nowadays in 2008. So, under NCCP, National Credit Consumer Protection Framework, the government have worked out by ASIC to assess the borrowing power for mortgage or a home loan in order to protect mom and dad's consumers from the evil bankers, so that mom and dads will have less stress when the economy goes up and down or things happen. They do lose their job, interest rate goes up, overspending, extra. Okay, so there are multiple formulas for borrowing power. Okay, some are residential, some are commercial. So first point is net surplus, which we'll demonstrate in this video today. Second one is debt service rate cover ratio, which is a bit outdated, right? In the old time, people have lower average income in Australia. The third one is interest cover ratio. So I think number 3, 4, 5, 6 are more for commercial, but I just list out for your interest for future videos. Okay, so net surplus. What made of net surplus formula? First of all, we start from the top to the bottom. Right, it's like a filter or funnel. Okay, so you work, either you open a business or you receive PAYG wages or salary, and the money comes in, but they go to the ATO first. How annoying, alright? And then you get the after-tax income to take home. Okay, usually we say that take home income minus the living expense you have to spend, and there's a few measurements, alright, that the banks used. Then what you do? Then you're gonna give the money to existing commitments that you have. For example, home loan, credit cards, car loan, extra, etc. Okay, I'll demonstrate in detail later on. And then you minus what? Minus a new home loan you want to propose, right, at whatever assessment rate. Then you work out a net surplus, how much has left after you spend all this money. Okay, so let's look at the first components. Gross income sources breakdown. There are multiple income sources, okay, that ATO can tax on you, besides the Chinese lucky money during Chinese New Year. Okay, first point, salary. Most people earn salary, right? They either have a full-time or permanent part-time job, which most banks like, and they will take 100% of the income. If it's casual, minimum 3 months for most banks, and you have to demonstrate previous job experience, provide previous group certificate, PAYG summary, all that. All right, some restriction over there, and then in your salary wages you also may have overtime allowance, etc. So all other components some banks may only take 80%. All right, rental incomes, that's interesting. All right, 60 to 80%. Different banks have different risk appetites, even at different postcode as well. It all depends on the concentration risk, which we'll talk about in another video. All right, service apartments. Some banks don't take 80% or take $0 for service apartments that you buy and then lease it back to the hotel. Okay, or Airbnb, getting more popular nowadays. Rooming house if they're compliant. All right, all the banks take this differently, so we do tailor research for our clients. You cannot step into the same river twice, so it is very enjoyable process to do the research. Number 3, there are bonuses and commissions related to management and sales performance. Most banks only take 80%, and they will need to demonstrate 2 years financial to show that the bonus or commission are consistent. They may take the lower or they may take the average. It really depends on each case. Some banks do take 100% of the commission just for 1 year, so case by case, right? Markets, policy, and appetites change all the time. Number 4, all right, we also look at business profit plus individual tax return. So the profit from the business that retained in the business, and plus the individual one, the profit that distribute to the shareholders or directors, right? Business retained profit also depends on how much shares you own in that company and if there's any significant change of that shares in the past 12 or 24 months. We'll talk about in more detail in other videos. The others income components which are not very often seen: dividends, interest, superannuation, pension, and government money. Right? Unless you are sophisticated investors, they have a lot of dividends and interest at all time. And people after 55 years old, they might receive the regular payment from the superannuation. Tax-free income, for example, unreserved. Then how much in tax you pay? Different people pay different rate. Right? This is the current 2017 tax threshold below 18,200 now, and then 19%, and then 32.5%, etc. Right. Living expense. Of course, with the previous point, there are some income you can add back, but it's a bit complicated. We'll talk about in another video. Living expense. Most banks use HEM, household expenditure measurements, from Australia Bureau Statistic website now, which you can find on Google. Alright, and your living expense is going to depend on your status, whether you're single, married, de facto, not married. Alright, people might have a joint venture with their brothers or sisters to buy investment property, or even with mom and dad. With anyone who is not married, the bank will treat you as two separate family household, so that's going to be double, right? Your living expense. If you have any kids, if you're divorced, do you have any continued liability or commitments? I wouldn't say liability is a wrong word, sorry. How can you say your kids are your liability when they are really are? Alright, breakdown. So the banks are very restricted. Nowadays, you can't just say you spend $1,000 a month. You have to break them down into 13 or more categories, including food, insurance, education, etc. Nowadays, the assessor wouldn't believe that you have no insurance, right? Especially if you have a car or something. They can have the right to ask you for 6 months bank statements and credit card statements to verify your expenses, habits, etc. Or if you have stated your living expense. Right? Some people are very tricky. They have multiple bank accounts and to distribute their living expense. But I'm not sure if it's the right thing to do, as long as you can manage your cash flow well. Alright, I guess. Number 5, living with family cannot be free anymore. It's pretty tricky. Well, even though it's commonly seen in Asian family, but most banks nowadays default start with 500 extra if you say you're living with family, and they will verify it by your parents' letter, state deck, or a title search to see who owns the property that you're living in, if you have the same family name or not. Right? So very tricky. Number 6, post-loan rental expenses. If you still need to pay rent when you settle this investment property, for example. Existing commitments including credit cards. In Australia, it's 3% minimum. So it doesn't matter if the clients tell you, I have a huge credit card, but I always pay them in time. The thing is, you have the right to not pay it in time. Then you have to pay 3% minimum of the credit card limit, right? Some car loans repayment, get ripped off by car loan. And help is interest free, but you still have an ongoing commitment. Alright, help is very interesting. Alright, look up help repayment on Google. The ratio you're going to pay, alright, it's going to depend on your taxable income. Okay, number 4 is personal loan repayment. That's consolidating. Okay, if you are doing refinance, you can top up your loan, or rather than paying 10-12% or higher car loan or personal loan, you can put them all together with your home loan secured by a house. The rate will be much lower, 4% above or below. Okay, and you have longer term, which means not 2-3 years personal loan, but 30 years home loan. So they save you a lot of money there. Number 5, the other home loans, right, which means other existing commitments you need to pay. Is either your own mortgage with your home, investment loan, right, maybe apply some negative gearing benefit, remaining terms, which means how many years that left, the rate you currently paying, is it interest only or principal plus interest repayment, alright, with loan statements that banks will ask to verify all these details. You cannot hide any of this mortgage anymore through the banks can see that through Vita check, credit report agency, title search, exchanging information among banks. So don't do that. Alright. Other loan under trust and company, as long as you are guarantor, will be taken into account. If it's a development finance that is not yet covered by pre-sale, then it is due your liability. Okay. So, alright, new home loan commitment. Finally, why the bank will use, most of them use 7.25%, because bear in mind that interest rate does go up and down for the next 10 years, right? And we want our client to hold their property comfortably through the economic up and down. In 2007 and 8, please allow me to remind you the interest rate is 7% each. Alright, and if at that time the bank is going to charge you 7.25% and doesn't allow you to have interest only, so this is your maximum commitment for the new loan you want to apply. It's like a stress test from the bank's point of view, right? It's not going to happen tomorrow. 2018 now we are in, it's the lowest in the past 10 years, but I still advise most of our clients to use, like myself, I use 6% principal and interest to put in the amortization, which is a principal plus interest breakdown for the next 30 years, to budget my future cash flow, to make sure I'll feel comfortable, to make sure that I have exit strategy, have some cash on the side, and I also review my insurance cover. Alright, today's rate, if it's 4.5 or 4.3%, will not affect your borrowing power because the bank are using 7.25 principal plus interest for most existing loan and new loan anyway. Alright, so in the end, we want our clients to have no mortgage stress. Alright, we're not the evil bankers. There are some other tests and components that the bank also look at. Right, net surplus ratio, which net surplus we look at. LVR, the banks, if under 80% for most properties and postcode, is safe. If it's over 80%, then there are a lot more criteria the banks will look at. They prefer you to have longer employment history, higher income, they're going to ask for more documents, etc. And lending mortgage insurance company will have some other policy as well. Alright, number 3, we'll look at loan to income ratio, because the government wants to help the lower income earners to buy their first home as soon as possible. So for example, if your loan is 8 times more than your income, even though you can serve your home loan with net surplus cash, but then some banks might still refuse to lend the money to you just because the government trend is helping the first home buyers or lower income earners at the moment. Right, this ratio might be getting tightened up a bit more, but we'll see. So that finished my presentation today, and I look forward for our next presentation, how to boost your borrowing power legally. And also, please allow me to go back to this point, net surplus, and remember the major components of this page. We will create multiple videos later to demonstrate you different banks calculator. Okay, for example, Westpac calculator, right? Bankwest calculator, and NAP calculator is gone. Alright, give me a sec. NAP calculator. You will see that all the major components I mentioned before, the banks just put them in different colors and position, but they're all the same, right? Gross income, rental income, family 1 and 2. If you have any debts, Your other living expense break down into different components: transport bills, grocery, health, proposed loan, how many months the loans, right? 300 months, which means 25 years. Actual rate, new or existing, what's the usage, investment, or on occupy, is it interest only? Your ownership, benchmark. Benchmark are usually all the same, right? 7.45, or they increase now. 7.45 now, oh my god. Other existing commitment, outgoing living expense notes, credit cards, personal loan. This is Bankrest, right? And other self-employed, maximum LVR, and then we'll look at. Right, let's close this. This is Westpac. They don't fully open this, but if I go and create, they will have something like this. Another point I want to point out is, in all the banks, they have a guide for the calculators, most of them. So this is NAB, for example, loan amount you want to propose, what's the interest payment type, all these components, security value, calculate LVR, how many borrowers, gross income after take home, after tax you can take home, bonus, foreign income, rental income, investment income, other income, non-taxable. Alright, if you're single, married, divorce, living expense, alright, can't click net income, other commitment, and LVR, net surplus ratio, loan to income ratio, etc. Alright, so in most banks, they'll have something like this, serviceability user guide, right? Most brokers out there, even the bankers, they don't have time to read this, or they are not curious, alright? Which means they don't have common sense. Right, this guide will guide you through bits by bits. Okay, self-learn, be curious, don't stop. Okay, thank you very much for today's video, and I look forward to see you soon. Thank you.